Now the indexes are off 6-7% for the year. NASDAQ is in correction, but you could already go around. Gold, rates soaring, Bitcoin doing absolutely nothing. Not a lot to get excited about. And for those who aren't familiar, I feel like the establishing shot on Ticker, on your Substack, is stocks for the long run. Over time, markets are going to go up. So a generally optimistic view, but how do you kind of see the market landscape right now? Are you as bearish, I think, as I feel? And I'm no bear.
Yeah, I mean, I feel bearish all the time. That's the whole, like if my newsletter was only about how stocks usually go up, then I'd only really have like one issue.
Yeah.
But, like the
So
story.
you read 3 times a week, so you got to figure it out.
Exactly, or else they start pulling subscriptions. But the story of the stock market usually going up is that it goes down a lot in that process. So it's like talking through stuff like geopolitical flare-ups and energy costs and interest rates and correlations and financial markets and all that kind of stuff. So yeah, I would say that every morning I wake up freaked out about what's going on.
Yeah.
And this is during peace times. A lot of the times when stock market is actually doing well or when it's near all-time highs, that's usually when I start writing about, let's take a deep breath and remember that things happen. And so, it's a question of, for my audience in particular, it's a question of how you behave when these flare-ups happen. And it's okay to be, bearish and scared and nervous, but, let's think big picture here.
Yeah.
Even during good times, there's bad things happening.
Yeah.
And so it's just a matter of how you deal with the flare-ups.
All right, so maybe since this feels like a bad time, we could talk about good things happening. Another thing that has really started to become, I guess I would say, and you're much more steeped right now in like the sell side consensus, let's say, what Wall Street is saying, much more than I feel these days. But in the last, 4 days, I feel like there's been a number, well, I guess 5 days, because going back to the middle of last week, it's Monday now, a number of folks on the street reiterating earnings growth.
Yeah.
Double-digit earnings growth, maybe 20% on the S&P 500. It felt a little, I don't want to say it feels hollow to me, because it's factual. Sure. It is what's going to happen. But there is something about all the factors pushing down the market and then coming out and then trying to remind folks about earnings growth that just feels like, maybe the last thing you go towards.
Absolutely.
When you're in this moment and trying to calm everyone down.
I mean, I think you have to be able to, especially in the context of investing, I think you have to be able to, put on a different hat. It's one thing to be Miles or Sam, the guy, the friend, the father, any of this stuff, a human being that exists in this world. And you can have feelings about, what's going on in terms of society or geopolitics, or, get upset when you go fill up the gas tank and, a gallon of gas is $1 higher. But you have to put on a whole completely different hat when you're thinking about, when you open up your brokerage account and looking at your 401k balance. Because unfortunately, none of those feelings matter if it doesn't come back and translate into something in terms of fundamentals like earnings and earnings growth. And so it's kind of a cold, cynical, dark way to exist. But as long as these companies are making money and saying that they're making money, you have to be positioned in these things. Because by the way, you're not looking to sell. I mean, some people are retiring, next year, in which case the story is very different.
Yeah.
But if you're, trying to cope with the world, you also have to remember that I need to build a life for myself 5, 10, 15 years from now. And unfortunately, it means things like making money while terrible things are happening in the world.
Yeah. I mean, the earnings piece of it is I think about earnings growth. Well, I was talking with Julie on Friday. It's earnings almost never go down on a year-over-year basis.
Yeah.
There's been, 2008-9 was kind of the last sustained downturn in corporate earnings. But the market goes down over time, which means that people want to pay more or pay less for each dollar of earnings growth in those periods. And so I just look at the current moment where the multiple on, and it started with individual names, your software names. You wrote last week about how it's the Mag 7, it's now their time. And it's funny, 4 months ago, there was a lot of conversation of you guys seen NVIDIA? It's getting really cheap. Well, it's gotten a little bit cheaper, and a lot of its friends inside the Mag 7 are also significantly cheaper.
Right.
Because none of these companies are looking for earnings growth to slow down,
Right.
and it actually, in many cases, it's inflected higher within the last couple of quarters, and yet still, the price per share on these companies is coming in, and so it gets to that, like no one. Now, again, you're talking long-term, kind of half-to-own stocks, but folks operating in a shorter-term kind of environment where they're trying to make what their portfolio looks like change on a more frequent basis, weekly, even daily, are a lot less interested in what the AI trade, Mag 7, all manner of that is selling right now.
I mean, well, I think something that people often overlook when they look at the history of earnings growth is there was actually a dip in the rolling 12-month actual earnings in late 2022, early 2023.
When the market went down 18%.
Well, when the market went down 18%, but the market went down 18% before
that. Yeah.
So it's your classic stock market behavior, right? Where it's anticipating something. So in some ways, the fact that earnings estimates are being revised up right now it might be irrelevant because that might be reflecting a story that we were talking about 3 or 6 months ago. What the market might be, well, I often gets those predictions wrong. But let's assume for a second that maybe the market is picking up on something. It is possible that maybe Q2 or Q3 or Q4 earnings later this year represent a quarter-over-quarter or a rolling 12-month dip, in which case it's being priced in right now. So is there a dislocation between what analysts forecasting earnings growth or revising up earnings growth? Is there a dislocation between that and stock prices? Maybe stock prices are just getting cheap.
Yeah.
Or it's possible that, again, I hate this whole prediction thing.
Well, okay.
But it's possible that like they're saying, no, this is actually going to translate into higher costs that lead to earnings dip later this year.
So, okay, because I was going to ask you kind of anticipated it, but I'm going to ask anyway. Like, I have been personally very hot on the price leads narrative idea that's out there. And I don't know who the main progenitor is of it. Like in my head, JC Peretz is like leading this bandwagon of the price leads narrative. Michael Batnick is someone who talks about this as well.
Meisler.
Yeah, and it's like, and essentially it's kind of what you're outlining, but I view it a little bit differently of the market's gonna do something and it kind of feels inexplicable. And then events will happen and it's like, oh, that's what was pricing it. Now, the current moment, the details of it, it's sort of a stretch, right? The market is kind of looking messy in February. There's this massive disconnect between the index and software stocks and all this kind of stuff. Gold starts collapsing, Bitcoin acts terribly, and then the Iran war kicks off. And there is this like idea of, well, the US is amassing troops in the area. Anybody could have seen this coming. Why weren't you guys sleepwalking through it? Although I've become kind of sympathetic to that idea that the market does have or reflect information, even if, to your point, it ends up being a wrong guess. When it's right, it feels more powerful. And maybe I'm just falling victim to some fallacy here around the narratives of investing and what's real and what's not. But it feels right now, I am very compelled by the notion that price can appear to be a random walk, but in a very short order amount of hindsight, it's like, no, there was information there.
Yeah, I mean, I'm not sure. I think at the very least it amplifies stories, right? Like if the market is down, if interest rates are blowing out, if gold prices are surging, we can't allow that stuff to happen in a vacuum, even though it might reflect technical factors or
Pod blowing up is the favorite one.
Oh yeah, well exactly. I mean that happens all the time,
it's
right?
Like who is this? Doesn't matter. It's a pod.
Because it's like the markets do something, and it's like, all right, well let's go through the entire world and figure something out. And every once in a while, it usually falls back on, well, the government has too much debt, which is a story that people have been telling for 40, 60 years.
Yeah.
But yeah, like I think
Larry
it helps.
Fink started his career, or Ray Dalio and those guys. They started their career with concern about the U.S. debt.
Yeah, everybody. And then if it goes sideways, you start a newsletter and warn your subscribers about that into perpetuity.
You should do an offshoot of your newsletter that's only about warning people about the
just the exact opposite. Yeah, I'll do it under a pseudonym.
Charge more money for that one.
Yeah, and I'll just keep saying why the Sam Rowe guy is terrible.
Yeah.
But yeah, I mean, like If you go back, I mean, I think something that is a good exercise is going back into history and like, okay, so we're in like a 9% drawdown from the all-time high. Well, let's go back into all those moments in history where we had a 9%-ish drawdown, and you'll never remember what happened during those periods.
Yeah.
You start doing some searches in newspapers and stuff, and then you're always going to back into some story about there was a geopolitical flare-up somewhere.
Yeah.
Tensions were high in Taiwan.
Brexit.
Something has happened. Yeah, something is happening in the Middle East. There's something always happening in the Middle East.
Yeah. Situations needed to be monitored.
And not to downplay the fact that it's pretty clear that there's like escalation in the Middle East. And again, not to rule out the possibility things could get a whole lot messier and a whole lot worse, but you go through the history, and you've written the Daily Markets Post for a long time. I've written Daily Markets Post for a long time, and I go back and read some of these records from 2014 or 2018. Like there was a huge. We were there for oil flare-ups 10, 12 years ago.